Well, thanks for joining us here today. My name is Ashley Jessen, and today we're lucky enough to have our senior currency analyst, Mike Moran, here, who's got some 42 years of experience working with some of the largest banks, including Lloyd's back in Southeast Asia, as well as some of the biggest banks here in Australia over his celebrated career. So what we're going to talk about today is some of the biggest market moves like September 11. We had the Plaza Accord that Mike's been involved in, the Asian currency crisis, Swiss National Bank, GFC, to name a few. But how do retail traders, or any traders, whether you're on a bank desk or whether you're a local trader trading your own retail account, how do you prepare for a big market event if you know it's coming? Something like September 11, we heard the news the night before, so preparing for the Aussie session that day. And there's a number of other events that happened that are just out of the blue and move the market swiftly. So today we're going to take a look at how do we prepare for events, what happens when an event happens, and what you've got to do and focus on for that session. So thanks for joining us today, Mike. It's great to have you in the office.
Pleasure.
You're usually writing analysis for us on a regular basis, but great to have you in the office here. So take us back to the day when September 11 happened. You obviously were, it happened at about 9:30, 10 o'clock Sydney time here in Australia, first thing in the morning over in New York. But take us through what happened, how you first heard about it that evening, and then leading up to the next day.
Okay, so it was flashing all over in the news that evening, just as I was about to get to bed, because doing the early shift, you want to try and get some sleep, prior to getting in the bank. And we're normally in the office about 4 o'clock in the morning. Officially, the Sydney market opens at 5, so it's the first market in Asia to open. The first real market.
The first, with our New Zealand, friends across the pond.
Yes, that's right. That's right. So the night before, the news was all over TV, and this was one of those events, which was obviously a big risk event, and
etched in the memory banks forever.
Yes, from the experience in the past. You had the 1985 Plaza Accord and 1997 Asian currency crisis.
Yes.
And then the 2008 GFC.
Yes.
Among the other things. So it was one of those events where you knew the next day, as soon as you stepped into the trading room, it was going to be go from the start. Yes. My colleague had actually gotten a call from our New York, because what happens at the end of the day is New York passes the orders. The bank has a currency order book, which is quite hefty. There are positions from different traders, from the bank itself, and from different clients of the bank that are passed on the order book. So. That's what on the night before I was already preparing for the next day, saying that this is going to be a big event, risk event.
Makes sense. And so you knew something big was going to happen. Obviously, these type of things do happen from time to time, not too frequently, thank goodness. Yes. But how does your day sort of change? How do you prepare for that going into something that you know is going to be massive? This is an unprecedented event, and obviously you've got your normal routines on the bank when you get into the office, but how do you prepare knowing that, you've already slept on it, you know that it's hitting all the news wires, everything's flashing red the next day as you're hearing the news headlines and that? What changes from your point of view as a trader going into that session?
Well, I pray more before the market starts, and to ensure that you have an idea of where the orders are, the big risk orders.
Yeah.
That's why my colleague had a word with New York already. Yes. He had called them and tried to find out what are the big currencies at risk, what levels, which he relayed to me, so that as soon as you get in, the next morning you're ready. What I do is I actually list them down on a piece of paper, so that I already have them in mind and it's clear in front of me.
So you sort of know where the current positions are. Are you taking into account some of the recent trends? knowing that some markets might have been trending at the time leading up to it, so it could move in that same direction? Or is it just the current close New York and then thinking about where it opens?
I guess it would be the current close. But in that case, in a risk event, normally on normal times, the dollar would be higher and the currencies would be weaker.
Yes.
So you're probably looking towards that.
Yeah.
Probably that, sort of that kind of angle.
Yeah. And why are traders positioned that way? Why is the dollar strength when an event like this magnitude happens, there's always like a flight to safety? Why is the US dollar that favorite?
Good question. And a lot of people have been asking that more recently.
Okay, yes.
But I guess it's always been that way. It's probably biggest economy in the world. They have a very independent central bank, and they've got a lot of reserves.
Yes.
I guess it would be that way. And then now with a lot of emerging markets, including China, they're beginning to question the role of the U.S. dollar, which up until this time really hasn't moved that much. In terms of reserve currencies in the U.S. dollar.
Yeah, true. So you get in, you're in the office, so your colleague is talking back with New York, relaying the information to you. How's when you're on the desk and that, looking after the different currencies, are you looking after all the currencies together, or do you have a selection of ones that you look after for the bank? Or how did it work that first thing in the morning? Like, what was the game plan after your colleague got off the phone to New York?
Okay, so we both sat down and he made the decision that we're going to divide all the currencies by two.
Okay. Yep.
Normally, which is normally the case anyway.
Yes.
But he had this in this case he had to be a bit more specific.
Yeah. Okay.
So he took for example the euro and the sterling.
Yes.
And I think the Swiss franc, whereas I took the dollar against the yen, and any other related, probably more to Asia currencies. Where he also took more to the Europe, including the Aussie.
Yes.
The Aussie.
Okay, and so the volatility, expecting a volatile session, and it is quite true that traders on the day, if some big event happens, they know that volatility is going to be huge. So in terms of taking on more risk or less risk, how did it look from that point of view? Or just even backtracking a little bit, are you, when that handover from New York, are you looking to close off existing positions the New York team had open, or are you speculating as well? Are you taking speculative positions on that day as well, or how does the day work in terms of that? Taking into account the volatility and either closing off existing positions or maybe opening new positions. How was that working with you and your colleague there?
The main risk, our main job was to just cover all the positions,
gotcha, okay.
Regardless of whether it was at a profit or a loss, without question, because things were moving so fast. You had to cover the big question was liquidity. Are you going to get the liquidity in case the currency trades at the level where an order lies, whether it's a stop loss or a take profit?
Yeah.
For example, in the euro, if it was at 100 and there was a stop loss sell at 100, and it was at the first price that you see is like 99.80.
Yeah.
Are you gonna wait and hopefully it bounces back to 100, or just sell it right away because the risk might be down to 99.30 or even 98.80?
Yes.
So that was the type of moves that you were expecting during that time, and it did come through. I mean, it's good if it's 30 or 50 points.
Yes.
In the 1985 Plaza Accord, you were talking about big figures.
Yes.
The moves were big figures.
Yeah, absolutely. And same with the Asian currency crisis in '97. Yes. I guess there's a lot of that volatility is quite huge. So on your book, are you taking positions for minutes or hours or seconds? Like, what sort of time frame are you? So if you're opening a new position, like how are you closing that off? What sort of time frames are you thinking about there?
Oh, immediately.
Right.
You wouldn't even, once you see a position, the level that gets hit on the screen,
Yes,
you look
yeah.
for a price to cover it immediately. You don't even hesitate unless you
Yeah.
can't find liquidity. That's
Yes. Yeah.
the big thing.
Yes,
So you've
yeah.
got a couple of machines.
Yeah.
At that time,
Okay.
the voice brokers, there are sprinkling that come in,
Yes,
but they're
yeah.
as good as their liquidity as well.
Okay.
Yeah.
Yeah. So you're punching orders into the terminal?
Yes.
Yep.
Yeah.
And then how's that work? Are you taking any phone orders as well, or is it all just you're taking positions via the terminal and
Yeah. Normally it's just you've got the order sheet in front of you. You can sort of see, and as soon as the orders, the level of the order is on the terminal.
Yep.
You try and liquidate that position.
Yes.
Square it off as quickly as possible.
Yeah.
Depending on the actual volume of the order.
Yeah.
Sometimes the machine will show a price there, but maybe it's good for 1 unit, and the order's for 100 units. And you hit the risk is if you hit the 1 unit, the next price would be another 50 points lower or higher against you. Yeah.
Yes. Yeah. So would you be more limit orders, or in case you're sort of mentioning that you just get out at whatever price, or take whatever you can see? So you're sort of hitting it at market and putting your orders to take out the depth of the current bid or offer?
Yeah, basically, you want to cover. You obviously have to think about where the next price will be for you to get out. So you obviously have to kind of look at that as well. How much depth is in this bid, or how much depth is in this offer. Those at that time you had the EBS and the Reuters machines. They had direct dealing. Yeah.
And so you're hitting those, but you're also paying attention to the liquidity on both sides, the depth of the market. Just making sure you're not hitting too large relative to it, I guess, trying to work your way out.
Yes.
So is the volume on the day relative to a normal day? Was it excessive?
I would say on the excessive, because you had quite a few orders, and sometimes if you executed part of an order, you're wondering whether you should do the whole order.
Yes.
And that leaves you with a residual position. Which is your own position. Now you have to sort of think about that as well.
Yes,
it could come straight back. And help you get out. But on that day, I believe, because of the time and the event, nothing had sort of happened prior. It was just a specific event that never happened before.
That's right.
So you just had to. We just said just cover.
Yes. Yeah. So, and what sort of experience, because I often think there's a lot of newbie traders, there's a lot of new traders entering the market, and clearly there's a lot of people that don't have the ability to trade on a bank floor or something like that, and trade bank funds and be in a position like, as you said, the Plaza Accord, the Asian currency crisis. So leading up to it, you'd already been trading since 1980 or so. So you had a depth of experience there.
Right.
But a lot of new traders are entering the market. So how would, obviously you were able to leverage the previous big market moves.
That's right.
It's a brand new event. You've never seen this particular one.
Right.
You've seen similar ones. So what lessons did you draw upon from that history of your trading experience? And then thinking about in terms of, I know it's hard to put yourself in the shoes of a brand new trader, but your experience that you've taken to trade that day versus a newbie trader going into something like this from never seen anything like that happen before.
I think for me anyway, the first thing would be to again assess the risk. And always leave a stop loss, and don't say, oh, it hit there, and it might come back. Always leave a stop loss and execute it. Don't fall in love with any of your positions, because they could inevitably go wrong together with someone. Although I know there's a lot of traders now, but maybe they might be on the line with someone. Keep your communications open.
Yes.
Well,
so it's a big difference, I guess, in terms of being with your colleague. You had the floor that you trade on, so you've got someone there to yell and shout and speak to each other. And nowadays you've got a lot of social media, so a lot of people leverage the social media, Twitter and that type of thing to be able to get those updates. But so for yourself, you've got your New York team plus your colleague on the desk, And then you've got the other team coming in a little bit later, right? The morning crew, so to speak. You're
Yes.
the very early Aussie
Yes.
crew. Then you've got your crew coming in later. So how important is it having that team around you?
Oh, it's very important.
Yeah.
When big risk events happen, like the ones in Asia, at least you had a team around you, rather than being on your own. It's a huge difference.
Yeah.
And that's the advantage, like you said, and I guess the privilege, and I consider it a blessing to have worked in a trading room, because it's all about teamwork at the end of the day. Yeah, sure, there are two guys that come in earlier than the rest, but the rest come in at a certain time, and I think the trading desk at that particular institution, currency-wise, was about 6 or 7 major currencies divided among those.
Yes, yeah. And just going back a little bit, you were mentioning that you've got, you're taking positions. So you might be doing, you might have 100 lots, and you're trying to close out, and 30 get hit. How are you working in your mind? Because one of the challenges with a lot of traders, it gets quite confronting when you've got a lot of opportunities, or you've got a lot of positions on, watching the market move, and then one's moving a lot, but the others start moving as well. Then it's very difficult to juggle all of those. So on the desk, when you're taking those positions, and are you keeping track in your mind? Are you writing down? It must have been frantic, but you're trying to keep like a net long or short, the Aussie dollar and dollar yen. How are you working that on the floor with you and your colleague, or just yourself personally, and then the team of you and your colleague at that point in time?
Focus on one thing at a time.
Yeah.
You can't be doing everything all the time. Okay, you might the risk, you might be losing so much here. Focus on one currency.
Yes.
Get that out of the way. Cover it.
Yes.
You don't have to worry about it.
Okay.
And then move on to the next one. And don't procrastinate or think too long, because there's just no time for it. Especially on an occasion like that, you have no time.
Yeah. So you're just drawing on. Largely sounds like maybe instincts. You've got your processes, of course, but at that point in time, it's instincts. You're sort of keeping that net position. You're hitting 30 short, like you're closing 30, you're opening 30 or whatever, and in your mind you've got dollar yen. You're sort of net long or short. Yes. But how are you netting off at the end of the session? Like obviously the session's coming to an end. How real time is that? Is it sort of in your head? Are you keeping a notepad?
Oh no, yeah. You've got to keep as well. At the end of it, you've got to have a record of everything that you do.
Yep.
And in those days, you had to fill in deal tickets as well.
Yes. Yeah.
So you're just crossing them out, and you would still have to fill in a deal ticket. Yeah. Which the back office then processed.
Yes.
So there was a lot of stuff that you had to do.
Yes.
But for that point in time, and I would say that would probably be between 2 and 3 hours on that particular morning.
Yes. And even with your experience, because we do a lot of new traders, it's like a kid at a lolly store. There's so much opportunity. You start looking at stocks, and there's so many currency pairs. Now there's cryptocurrencies as well. Like it can be quite overwhelming. And even with all your experience, both you and your colleague are really narrowing in just to a couple, so you can focus on those, right? So what sort of what advice would you give to those that when they start, it does appear like there's a whole world of opportunity out there, but then at some point they've got to narrow it in, right? You've got to be able to focus. So what advice would you give to those who are, it really is a world of opportunity. As I said, cryptos, indices, gold, silver, there's crude oil rallying at the moment. What was the euro was up, gapped up 50. It doesn't gap up much, but it was up 50 odd pips this morning even.
That's right. Focus on a couple.
Yes,
which is your guide.
Yes.
Whether it be the dollar against the yen, or specifically currencies.
Yes.
If you want currencies, just focus on maybe 4 major currencies, including especially for us here in Australia, including the Aussie, the euro, perhaps, the yen.
Yes.
Sterling. Sterling is also a big. So focus on those.
Yes.
And be, try and be a specialist on those, because often they can also be a leader on the day. And in my case, I did a lot of emerging market and Asian currencies.
Yeah. Okay.
And often some of those Asian currencies, they could be leaders as well.
Yes. Yeah. And so on that day, I know you sway more towards the fundamentals. That's
Yes.
been a big part. Obviously, technicals do play a big part. But in the back of your mind, when this event's happening and you're on the desk at the day, are you thinking of how a country's currency, like what decisions that would mean to them? Like what's playing in your mind from a fundamental? I know it's happening very fast, but in the back of your mind, you must be thinking, how does that relate to this country and that, like dollar yen? Like how does this relate? You know, like what's going through your head in terms of the bigger macro picture? I know it's all very news driven and it's so fast and it doesn't seem like it would play a part, but you're getting a bigger theme in your head, I'm thinking. Like, yeah, how's that playing out?
Just keep abreast always of
Yep.
the news events. For example, we can go to a specific recent example in the dollar yen.
Yes.
You know, when the yen started depreciating against the dollar, a few Japanese officials came out, you know, expressing, that they were against, quick movements.
Yes.
And then a few more of them joined in.
Yes. Yeah.
And sure enough, the dollar came down and the yen appreciated. So keep an eye on things like that.
Just rallied like 450 pips, dollar yen.
Yeah,
and then just
come back slowly, and also today in the world of what's have news. I guess how would you say it? The news? Read and have news that you can trust on. You can trust.
Okay.
You know, because what's real and what's fake today, it's you just have to try and decipher, and also experience will tell.
Yes.
Experience will tell. So there are certain news that I look at that I've looked at for years. Some of them now you really got to have a subscription into them, which might be worthwhile. For example, Reuters has always been around. They've got a lot, particularly on currencies.
And so on that day, are there talking about trustworthy news sources and trying to decipher what's real and what's fake? Are there trusted sources on the desk on the day? Have you got a screen open that's got sort of streaming news coming through, or what was that news flow to you and your colleague on the day? Okay,
so I'm trying to go back to that time, but most trading rooms now, I think, and even around the GFC, most trading rooms have live TVs going all around with all the news. The U.S. News, CNBC, and these are constantly. I think even in the early 2000s. They started having the TV screens with all the news, and this is readily seen by all the traders.
True. So I guess you've got to have that trusted source, knowing what's coming through and being able to. But then on the day, that volatility, you've just got to react, and you've got to draw on that instinctual, that experience that you've had, which is leading to the instincts that you're making on the day. So at the end of the day, like you have recounted how big an influence this had on you. What's I guess on the day, like what are the biggest lessons that you've taken since then? And obviously sprinkling in a bit of GFC and Swiss National Bank, a few of these other big moves since then. But how does that all sort of culminate into some maybe some useful tips for those out there who are trading their current accounts, whether they're a decade experience or if they've just been trading the last 10 days? Like, what are some nuggets of wisdom from Mike?
I guess the first one really would still be to leave a stop loss.
Yes.
And choose a service that that you can rely on, that's trustworthy. And communicate as well with other traders.
Having a team.
Have a team. And then I guess we didn't talk too much about it, but price action.
Okay.
Like I look a lot at price action.
Yes.
Like for example, the euro. Like 100 might be a big figure. If it trades around there for a while, tries to go up maybe 10 or 15 points, and then comes straight back down.
Yes.
Maybe there's something up there that's keeping it, or maybe on the other side there'll be something at the bottom. The Aussie is one of those currencies that are notorious for having that. So the price action
Yes,
it's good to have a live trading screen in front of you. So price action also means a lot. Look at the highs, the lows, and where it opened.
Yeah.
And just look at those.
Yeah. And I guess you're. I'm almost thinking that you're reading the ticker basically. Like all the numbers are coming through. You've got your charting software, but maybe even just focusing on the price action of the actual ticker. That's like as the print's coming through, you might see it sort of settling at one area, and so you're sort of gaining. Like, okay, well, we need to. Or gauging, whether I should be long or short at that point in time. Is that sort of how it was happening on the morning?
Yeah. That was happening, and you obviously, I guess it would be more relevant to today. But during that time, really, it was cover.
Yes. Yeah.
Don't even think about it. Be defensive and cover.
And live to fight another day.
Yes, live to fight another day. Just make sure that you. Cover all the customers, particularly the bank. Institutions have customers. You've got risk on your book. Just be defensive and cover it.
Yes. Yeah. Nice one. Okay. Well, it sounds like it was an action-packed day, and many others since then, of course. Maybe just briefly, like on the GFC side, I recall the Aussie dollar. And some of those currencies were moving 7 big figures overnight. It was pretty crazy. Were you trading actively then? And
yes, I was at one of the major banks in Singapore.
Yes,
trading the Aussie and the Kiwi. But on that particular time, I was on leave.
Oh, right.
But I had to watch the desk and manage it. Like you were on leave, but you weren't on leave. Because it was happening at that time. And like some of the Asian currencies, I think the Thai baht, when the Thai central bank had to come in, so those ones were really hit hard. And it didn't happen it happened over a period of a few days.
Yes.
Maybe about a week. Just thinking about it,
it did, it played out.
Played out,
I was having a look the other day and capturing a few charts of it, but 7 cents, I think 7 big figures was like the biggest one day, but I think 600 and 700 might have happened twice, and there were a couple of 300 to 500 move days within that sort of 2-week period. It was a lot of uncertainty, and I guess that strength to the US dollar, the Aussie dollar was getting hammered down, and gold, silver, and those were also getting hammered down as well. So there's never a dull moment in the markets.
No,
so, Well, I think thank you very much for joining us today. It was a really good perspective to see what was happening, and I guess the way I think of it, I've never been on a bank dealing desk, so it's good to be able to transfer that message and the feeling and the what was happening on the day of someone who was actually there trading large funds rather than just their own retail trading account or something like that, and to have that depth of experience over 42 years in the market. So I know a lot of it's maybe instinctual now, and you've got that background, but certainly some great lessons for those traders. So hopefully everyone out there, you take some lessons home in terms of making sure you've got those figures that you know about the currency pairs, narrow it down so you can focus in on those currency pairs. Make sure you use stops, because you never know when an event is going to happen, like what we saw in whether it's September 11, the GFC, or the Swiss National Bank unpegging their currency, and make sure you know where those levels are for you and live to fight another day. Some days you've just got to cover and get out of the market and protect the downside. So thanks again, Mike. I really appreciate it, and look forward to maybe talking about some other events as they unfold in real time.
Sure. Thanks, Ashley. It's a pleasure and a privilege to be here.
Definitely. Thank you.